I do think we're going to have kind of these rolling crises over the next several years. But I think the U.S. actually hangs in fairly well compared to the rest of the world when that happens. So, I guess I kind of have a little bit of a nuanced view here. If you are not already in equities, I think it's very difficult to go out and buy them right now. Now, having said that, I don't think people should be sitting 100% in cash either. As I just said, I expect stock prices to come down sometime in the next 3 to 5 months. But, in fairness, I've been saying that for like a year. So, and it hasn't happened. I'm not completely on the sidelines. I am a money manager. My clients have owned equities for years. We still own them. We have had hedges on from time to time during that process. It turns out we haven't really needed those hedges over the last couple of years or a year and a half, because equities have, really gone up and to the right for the most part. But for all the reasons you just pointed out, I don't think you can just have all your money in the stock market and not have any money on the sidelines or not have some kind of protection as well. I talk to a lot of people who are just so certain that they know what's going to happen, and they're certain that cash is going to do well, or they're certain that gold's going to do well, or that Bitcoin's going to do well. And I'll tell you, I've been doing this for 25 years now, and it's the most uncertain time I've ever experienced. So, I don't think anybody should be all in on any one thing. I think a lot of people who think that the dollar is under this imminent, risk of demise are focused solely on the United States. And when you do an analysis of the finances of the United States, the only conclusion that you can come to is that we are in a lot of trouble and things are going to go really bad. And as a result, the dollar's they're going to have to, do a bunch of bailouts. They're going to have to print a bunch of money, and that's going to cause the US dollar to get inflated away. And so when you do that analysis on the United States, it's not that is necessarily incorrect. That's actually a fairly, I would say, a good conclusion to come to. But the problem is that analyzing the United States in isolation doesn't do you any good, because it's not an isolated world. And the fact is that the rest of the world uses dollars. And there's a bigger market for dollars outside the United States than there is inside the United States. And that leads to an incredible amount of demand for US dollars. And that is what has allowed the United States to get away with profligate policy that would have sent many other countries or many other currencies, kind of into the toilet, so to speak. It's this euro dollar market. For those who weren't familiar with the euro dollar market, I'm not talking about the euro currency. There's a market for dollars, US dollars, that exists outside the United States. And so dollar-denominated transactions, dollar-denominated loans, dollar-denominated balances sitting outside the domestic United States is part of this euro-dollar system. And there is an incredible amount of demand. And many people know that the United States has borrowed like 33 or 34, 35 trillion dollars. That's a huge number. And, again, they will use this as evidence of why the U.S. is in trouble. But the rest of the world owes even more dollars than the U.S. does. And they don't owe it to the United States. They owe it to each other. So one person's liability is somebody else's assets. So the difference between the United States and the rest of the world, though, is the rest of the world cannot create dollars out of thin air the same way that the United States can. So when they get in a tough spot, the U.S. can set up these bank term funding programs. So they can they can do bailouts. They can increase the money supply, the dollar supply. The rest of the world doesn't have that option because they can't create dollars. The only way that the rest of the world can create dollars is by extending new loans, which puts their own capital at risk. There's not a central bank out there that can create new U.S. dollar collateral. And as a result, when the dollar goes higher, it makes it really hard for the rest of the world to pay off their US dollar balances. Think of it, as interest rates have gone up in the United States, that has made it harder for homeowners or borrowers or credit card, people with credit balances on credit cards. It's made it harder for them to service that debt. That same issue exists outside the United States, but on a much bigger scale than currently exists inside the United States. That creates demand for dollars. Some people will then say, well, what if the rest of the world just defaults on these loans and starts using a different currency? Okay, so if they default on those loans, again, they don't owe those dollars to the United States. They owe those to each other. And it's 30, 40, 50 trillion dollars. So if they default, they're not just losing 30, 40, 50 trillion in debt. They're losing 30, 40, 50 trillion in assets. Now, I don't know anybody that can withstand $50 trillion leaving their balance sheet in assets and still perform well. And the other thing is, let's say that they decided to do this anyway. Let's say they decided to take the pain, They're going to default on all this US dollar debt, and they're going to then use a different currency. Well, if they were to do that, do you think the United States would still allow those countries and those corporations outside the United States to sell their goods into the United States in something other than dollars? Of course they wouldn't. And so not only would they lose their 30, 40, 50 trillion in assets, they would now have to trade all amongst themselves and would not have access to the biggest consumer market in the world. So these are just a couple reasons why it's very easy to say that we're going to de-dollarize. It's extremely hard to actually do it. Just because the president of India and the president of Brazil get up on stage and say we are committed towards a new currency and a new trading bloc doesn't mean it's actually going to happen. You know, when Joe Biden gets up on stage, nobody believes him anymore. When Trump gets up on stage, a lot of times people don't believe him. But as soon as a foreign politician says something, wow, it's absolutely 100% going to happen. So I would encourage people to take, foreign politicians' comments about as seriously as they take U.S. politicians seriously. Because again, in the U.S., people will say the U.S. politicians won't accept any pain. They will do these bailouts, right? But then they say these external politicians, they are going to accept the pain. They're not going to do bailouts because that's what it would take to de-dollarize. And I'm saying these politicians outside the United States are no different. They don't want to accept the pain of deleveraging, of losing assets, of their currency falling. And so the pain of defaults, and so they won't do it either. And that's what it would take to de-dollarize. And so I think a lot of times people get in a habit of being very critical of the United States, but then be very forgiving for the sins of other countries who are basically in the same or worse shape than the United States. I'm a big believer in gold. I think everybody should own gold. To me, it should be kind of the cornerstone or the foundation upon which all portfolios are built. I don't think you should go all in on gold. I don't think you should sell everything you own, buy gold, move to a mountaintop, and come back in 10 years. I don't think that's the way to go about it. But you should absolutely own gold. I actually believe that in the years ahead, we are going to see gold and the US dollar rise together versus all other fiat currencies. And so, just because I'm bullish on the US dollar versus other currencies, it doesn't mean I'm bearish on gold. And the other thing is with gold, I don't buy it expecting it to pay off tomorrow. To me, gold is an insurance policy. It's not, something that I look to get rich on. It would be something that I would look to preserve my wealth on. If we live in a world where gold has gone to $5,000 or $10,000 or whatever your target price is, this is not a world where you're now flying around in a private jet and staying at five-star hotels. You may have protected your way of life while everybody else's fell, but this is not going to be a situation where you have done spectacularly well, everybody else is doing okay, and it's kind of the same type of an environment we're in now, except for you're the one with all the money, and the people who were formerly hanging out at the Four Seasons are now at Holiday Inn. So that's my view on gold. And the other thing I want to say is a lot of times when I will talk about where I think the U.S. is headed in the years ahead and how I think it's going to outperform the rest of the world, I will get labeled an American exceptionalist. I've been labeled a jingoist because I think the U.S. still has the strongest military. And I want to be clear, this is not my viewpoint. And it's not that we won't get hit. It's not that we won't get hurt. I actually think we're going to get hit pretty hard. I just think that we're going to handle it better than much of the rest of the world for many reasons that are kind of built into the design of the system. And, some of these advantages that the U.S. has are deserved and some of them are undeserved. But regardless of whether they're deserved or not, they exist. And I think that will allow the U.S. to weather the storm a little better. I'm not expecting us not to get hit. I think we probably will get hit. I think we'll probably bleed a little bit. But I think if it really comes down to it, then I think the U.S. can throw a few punches of its own and probably knock a lot of people out. And so, again, this is not what I want to see happen. It's just, as an analyst, that's how I see it playing out. So I don't think people should come away from this and say, no, the U.S. is fine. Brent says the dollar's fine. The U.S. economy is fine. That's not the case at all. It's just that when you look at Europe, they are in a lot of trouble as well. When you look at Japan, they have a lot of challenges as well. China is currently going through, a real estate crisis. Their stock market has crashed. Their currency's fallen 15%. They've had to drop interest rates to try to, prop up their market. I mean, all of the things that people are worried about one day happening to the United States are happening right now today in China. And so when you look around, where would you rather put your money? I mean, if you would rather put your money in China than the United States, it's your money, you're welcome to it. But I don't think that's a good bet. If you'd rather put your money in Germany than the United States, I don't think that's a good bet. I don't think I'd put my money in Russia rather than the United States. And when you start kind of doing your analysis and you realize even though the U.S. has these negative characteristics currently, so does everybody else. And on a relative basis, global capital will go where it is treated best. Doesn't have to be treated good, just has to be treated the best. And as individuals, we kind of have the opportunity to kind of check out. We could sell everything. We could go buy gold and just sit on the sidelines for 5 or 10 years and see what happens. But big global corporations, big actors on the global stage don't have the option of selling everything and going and sitting on the sidelines for a number of reasons. And again, you may not like that, but that's the truth. And so this global capital, global asset allocators are going to put their money somewhere. They're not just going to leave it in cash. And when they start doing this analysis, it's my belief that they will continue to allocate it to the. And I should say that this has been happening. This isn't new. The U.S. has outperformed the rest of the world on a number of different economic variables for several years, and I expect that to continue.